Yes, ma'am. Chirantan Patnaik, Director, Venture Capital, British International Investment, BII. Neha Grover, South Asia Regional Lead, Private Equity Funds, IFC, International Finance Corporation. Pawan Gupte, Partner, Iron Pillar. Siddharth Junjunwala, Executive Director and Head of Funds, Waterfield Advisors. And to moderate the session, we have Pratibha Jain, Head of Strategy, Group General Counsel, Everstone Group, and Executive Council Member, IVCA. While the seating takes place, I would also like to inform the audience that this year for the conclave, we partnered with Grow Trees. And for each delegate who's present at the conclave, we'll be planting trees in and around Mumbai as part of our green initiatives. So now that we have all the folks on the stage, I would like to call upon Pratibha Jain to start the moderation of the session. Thank you so much, folks.
Thanks, Rohan. Before we start, can I give a big shout out, because I won't speak again, to IVCA for really pushing on diversity. You know, first time I've seen the push not only for speakers, but also for the audience. I think the women participants are getting in free. So great job. You know, I love moderating, so thank you for getting me to be a moderator. For once, I don't answer the questions, I get to ask the questions. And when, you know, the panel is so august and knowledgeable, you get to learn in the process. So I'm really looking forward to the session today. I think, you know, as India takes its rightful place in the global economy, this industry is going to and is playing a key role in that. And, you know, my esteemed panel guests here are key ingredient to the success story that has to come out of this industry. As we move forward, I think the question that everybody has, you know, all the conferences that I have been to outside India, suddenly, you know, we are the poster child. India is the story, whoever you talk to. We are getting more talk time than we ever did. But are we really seeing that convert into actual deployment on the ground? So I just want to really start with that key question, because I think that's what everybody wants to know. In terms of, you know, what do the LP allocations look for, and, you know, what is the broad theme that you're looking at vis-a-vis India as we start off this year? So, you know, if we can start with you, Siddharth.
Yeah. I think I actually feel very happy for that particular associate sitting at a large LP position and preparing their IC notes on India, and probably this is the first time it might just pass in their IC without too much of a fight. So I've been in that situation before, where most of the time we got turned down, but I think this time all the hours that you put in might convert. Uh, Pratibha very rightly put, I think there's a lot of buzz around India, um, whether for the right reasons, for the wrong reasons, or whatever. Most of the perspective, I think, is because there's reallocation that's happening in terms of how LPs want to take exposure to Asia now. And that's because, of course, China. They want to reduce their exposure. So will there be a lot of capital coming in? Yes. Indirectly, for sure, there are a lot of regional funds who are now reallocating to India, changing their strategy. So that's for sure is going to happen. I think if I divide it between two geographies that I probably believe I understand a bit, if I look at the Asian LPs, because of the proximity to India, they've always been around, they understand the geography very well, they've been investors for a fairly long time. The excitement is definitely there. And conversions are happening. I think I've seen very large LPs who've been writing checks upwards of $75 million are now happy to write checks of say $25, $30 million in a venture fund. So definitely happening. I think when I look at the US LPs, there is a lot of buzz, but I think till the time they actually come down and see what kind of transformations that's happened, I think they're still on the more on the fence, educational about the geography, and in some ways still continue to be colored by what they believe, what was true about the geography 20 years back. So I think it'll happen, but I think it'll happen a bit slowly from the direct LPs, particularly from the US.
So I think just to add from a more global perspective, so I've seen invest in private markets across private enterprises across emerging markets. And in India, we've been investing in funds for over 25, 30 years. I think if you look at the cycle, 20 years ago is where the private equity industry started booming. And we had a lot of fund managers, we had a lot of capital coming into India. And we all know the history and the journey of those private equity funds and the way the industry has evolved today. So for sure, there's a lot more interest. People want to know more. But the LP allocations are dependent on 2 or 3 different things, right? One, who are the LPs that are looking at India? So some of them are looking at very thematic sort of investments. So they're very clear they only want to do climate, sustainability, those kind of investments. There is another set who's saying, we don't care, we just want returns. So whether it is VC or PE or any other strategy or theme, we don't really care, we just want to make money. We think that India is where we can make money over the next 10 years. And that will be some of your family offices, larger sort of HNIs who've started investing in India over the last few years. Then you have the DFIs, you have even fund of funds will probably be in the earlier category. If you look at DFIs, DFIs have been in India, have supported the ecosystem. IFC supported a lot many fund managers, first-time fund managers in the last 2 decades. Today we believe that the market is vibrant, the industry is fairly well developed, and we can be a little bit more, I won't say biased, but we could support managers who've been there, who have an established track record, who are experienced in the market, while at the same time seeing which segments in the industry need some more support from a market creation perspective, and therefore look at those GPs. So honestly, for every kind of fund manager, there is capital available. There is domestic capital, there is international capital. I talked about it from an international capital perspective. You just have to find the right LP who will be interested in your strategy and your experience that you have to offer and how you fit into their strategic sort of interest in India. And that's where I think that's the most critical piece, finding that right LP who will back you.
Thanks. Ian.
Thanks, I'm Anita, and I just firstly want to say thank you to Pratibha and IVCA for having us all here. Adding to what Sid and Neha said, since I'm focused on the climate and technology areas through Edina Capital, I would say that there is definitely a buzz for India. Also, India is seen as one of the big economies that has to transition and that it will need a lot of capital for that. So there is interest. However, the realities that are taking place in other parts of the world. So if you look at the US that has introduced the Inflation Reduction Act, there's a lot of subsidies that are going towards sectors like green hydrogen, solar panel manufacturing, battery manufacturing, recycling of batteries. So capital that could have potentially found its way to India, suddenly the US clean tech market has become very attractive, and I see that that has actually had a dampener for all emerging markets, not just India. In Europe, because of the Russia-Ukraine war, there's a lot of focus on accelerating energy transition in Europe itself, and that has been a detractor to some extent from capital that could have otherwise found its way to India. Having said that, I'm still sitting here and in the process of raising a fund, and what's really encouraging is that some of the unusual players, like large family offices, in the US, you have a group called CREO, 120 of the top family offices of the US that are focused on climate change. They have not done a lot in emerging markets, but I see a slow transition and a recognition that if they need to address climate change, they have to come invest in emerging markets. So those are some of the positives.
Thanks. So first of all, again, thanks to Pratibha and IVCA, and thanks to, we are privileged to have folks like Anita who are also part of our, ambassadors at Iron Pillar. I think going back to the question, it's, to me, it's straightforward, right? It's, if you sort of zoom out a little bit and take a view on the long-term nature of the industry that we're in, that's the advantage we have, right? We don't have to worry about day-to-day, month-to-month marks. We do worry about marks, but on a quarterly or annualized basis. We do have the luxury of, investing behind something and then driving value and creating change, and then eventually handing it on to the next, next investor in the food chain, basically. So if you sort of, again, zoom out in that and use the multi-decade lens that we've all been talking about, it is a positive trend for India. And that's, again, I think there's the macro reasons for that. There's the increasing sophistication of alternatives in general. Alternatives are mainstream now. They're no longer alternatives in many portfolios. There's, Americans obviously are investing much more, allocations going up from 5-7% upwards. Europeans who were at sort of 3 to 4% moving upwards. Asians who are 2-3% moving much more upwards. The Japanese, the Koreans, etc. So macro trends in our favor. And at the same time, I think the propensity and the sophistication of the markets here in India has obviously, it's deepened. There's many more strategies today. You're talking very specifically about climate now, which I think 10-15 years ago, we talked about India in general, India private equity, India VC, right? Nobody talked sectorally or, in a very narrow focus. So I think just the fact that we are here, sitting here, we just had another deal close 2 months ago on the secondary side, which was, again, as they call it, a continuation vehicle, which was an eye-opener to me personally, saying, wow, this is here now, the trend is here. So there's definitely appetite amongst the large global investor community for India. Yes, I think the geopolitics helps right now, but again, I don't think we should rely on that. It will, I think, as easily go away in a matter of maybe a year or so. And therefore, I think the endeavor should be to build a sort of long-term sustainable practice at each of our, areas, right? So let me pause there and hand it over.
Thanks, Chiranta.
Thank you. Thanks, Pratibha. I think just obviously want to echo quite a few of the themes. one key theme I take back is sophistication of this asset class. It is, and you mentioned about it not being alternative, right? That's a very interesting point that we're seeing. So if you look at global allocations, you'll have a China allocation, you'll have a Southeast Asia, India, of course Europe, US. And the more I talk to some of our GPs, some of the LPs, global endowment funds, global endowments and other fund of funds, a common theme comes up, which is, look, we need to find yield, we need to find quality managers, and that's something we're finding in India. So it is clearly a very good time to be raising. I think a lot of people talk about low interest rate the environment over the past decade, which has helped asset prices, which has helped fundraising. But a very, very fundamental change that I'm seeing in India is the domestic asset class build-up. I think that is the low interest rate moment for India. So yes, there's an allocation shift towards Asia and then probably India, and then there's this whole domestic capital formation, which is very good. Which I think in totality, we will see a good creed emerge. My only concern, and this is something we obsess about as asset allocators, is the underlying assets are good. Private equity, real estate, credit, infrastructure, venture capital. It's about the longevity of investment firms. How enduring are they going to be? What's succession going to look like? Just what is the team build up? Because ultimately, we are investing in teams. Right, and so that's something we spend a lot about, and I'm seeing a lot of positive conversations happening at the GP level on that. So yeah.
Thank you. That's quite wide and varied views on where the LP allocations, whether geographic, whether thematic, the kind of GPs we are looking at. So I'm going to deep dive into all of these. Neha, if I can start with you, we are seeing LP allocations come with a lot of conditions. It's the industry itself seems to, be going through a curve, and we are right now where, whether we are seeing discretionary funds, SMAs, we are seeing, requirements for co-invests coming from LPs. How do you suggest the GPs navigate these?
So I think it's going back to my original point of knowing your LPs and knowing what they require, what is their strategic fit, what are they looking for, right? So there are investors who are very keen, who say that, okay, we are going to be investing alongside a fund manager, and that will be sort of our diligence on the manager. And therefore, once we've done a direct deal or two with the manager, we will then go ahead and then invest in the fund. We are not going to be investing in the fund and then doing co-investments. So that's sort of a different way of doing diligence for some of the LPs. There are other LPs who are reasonably passive. We'll do it directly with you. We don't want someone in between. And we'll do it directly with you. We don't want someone in between. And then there are investors like us who prefer co-investments, who want to be working with our portfolio fund managers. For example, IFC, and I can take our example. We are globally one of the largest lenders. In India alone, we lend about $2.5 billion a year. Equity is actually a smaller part of our business. About 20% is equity. Roughly 2/3 of that is done through funds and co-investments. So when we work with our fund managers, we see, okay, how can we add value to not just our managers, but our investees by supporting them through debt, through financings, through co-investments as well. And I think that's a great collaborative way of working with your GPs. This also helps build relationships, repos that helps the LP supports fund managers across funds. And it's therefore not limited to doing one fund investment and then the GP having no certainty on whether the LP is coming back for the next fund or not. So I think these are different ways of building relationships. These are different ways of diligences. And as my co-panelists were saying, Pawan and Chirantan, the sophistication of the asset class, as it is increasing in India, we're seeing more and more of this, and this is only going to be increasing, that it is no longer going to be just pools of money allocated to India saying, okay, do what you want, there is going to be more interaction, there is going to be more collaboration between LPs and GPs to achieve the sort of common goal of not just making money, but also the developmental impact and creating markets and ecosystems. Thank you.
Thanks, Neha. That's a very positive.
Can I just
Yeah,
add
go
to
ahead.
that? You know, one of my partners here, Sajid, actually says this in a, you know, in a light-hearted manner, that we're actually in the customer service business. You know, we have to work with our partners who are our capital partners. We, again, given the nature of our business, we always need partnerships on the capital, you know, ecosystem side of things. So, and everyone has their own risk returns, right? Somebody likes a Series A early stage, it's B, C, D, whatever. And it's our endeavor to always sort of be in the know of what is it that their risk appetite is, and at what stage can we bring a portfolio company to them, and, you know. But that's just, I think it's the same point that we
No,
have
absolutely.
to work closely
You
with
know,
these.
and as Neha said, and you said before, it's the sophistication of our GPs in India now. You know, there are enough GPs in their, you know, second, third, fourth fund to have that sophistication in the market, and then the rest of the industry learns from them. And that's probably why we are seeing the sophistication from the LPs also coming, because they know that, you know, the GPs can deliver on those spaces. So that's very helpful. Just moving to the thematic funds that you talked about, there are certain sectors that seem to be hot no matter what. You know, despite what you said about, you know, the global demand pulling away from the Indian market for climate impact, it's the buzzword, right? Everywhere you see, even within sustainability, everybody's talking about climate impact because the need is so huge. There's infrastructure, which has been, you know, now been in demand and performing consistently. So any views on, you know, how that's being looked at globally, and how do we see that panning out, and what other sectors from India seem to be in that global environment being talked about? Pavan and Anita, if you can.
So if you look at it, I see it as, to begin with, I hesitate to call sustainability thematic because honestly it cuts across all sectors. But anyhow, for simplicity, we stick to that theme. But what I see is a confluence or a convergence of three big trends. So one is the fact that if you look at the global economy, 90% of GDP has committed to net zero commitments, ranging from 2030 to 2070, as in the case of India, whether it's countries or corporates, that there's a huge bulk of contributors to GDP who've said that they are going to be net zero by a certain date. So there is a clear path that has been set out. The second is on the demand side from the population, the citizenry. So coming to your point of customer service, there is really, like, every survey, Gen Z and the millennials have a stated preference for sustainable products. And that's very prevalent. Even in India, surprisingly, it was 70% of Gen Z who said that they would be willing to pay more for sustainable products. And the third is really the evolution of technology. So today you can't imagine a sector like the banking sector without having a net banking presence, whether because of COVID, health, education, retail, consumer businesses have all, become more digital. The two sectors where I see the next 10 years really transforming are infrastructure, as you mentioned, and real estate or built environment. And in both of these, digitization is starting to take off. And here again, there are many contributing factors like the scale of assets. So 10 years ago, we'd be impressed if we saw a 40 megawatt solar farm. Today it's 500 plus plus. So the ability to use technology to really get productivity, better access, lower costs, scale is much greater today. So when we look at LPs who are interested in these sectors, sometimes they have a narrower sectoral focus, but very often they are looking for really how do we move the needle in transitioning to a cleaner economy. And then the second sort of corollary to that is how do you measure that movement? So measuring impact is very critical, and that's something that we in Edina are working on, and it's very interesting. It's an area on its own. The third point is that I think gone are the days when people are saying, okay, this is impact, so I'm happy to have a lower return. I think everybody who's in this business and where we've seen this business scale, it's when it's been profitable. And that is a realization which I think is becoming more mainstream.
Yeah, I would just add to that saying, like again, going back 15, 20 years, we should think of technology as a sector. And now technology is all pervasive, right? So it's no longer a sectoral approach. It sort of cuts across everything. But the good news is, again, I think, as Anita was saying, the sophistication of investor pools and getting more narrow, more focused, knowing probably what they want more of or where the gaps in the portfolio are. Like we've seen even data centers as a strategy evolve, which earlier wasn't the case 10, 15 years ago again. And it was broadly lumped under infrastructure. So yeah, I think it's just more thematically, more sophistication. Sorry?
Green data.
Absolutely, green data centers as well. It's getting more and more niche. But I think that's good. If you can show your expertise and your focus as a manager in that space, I think the point is there is capital to be had there to be efficiently deployed and returned, right?
Thanks. It just shows, what you're saying, the fast pace at which our industry is moving and the changes. ESG used to be the buzz, and now ESG is the base, and then impact was the buzz, and now impact is pretty much mainstream in terms of returns. And technology is pretty much the base for everything. And that's why, making sure that you have the depth that the Indian private equity industry has. I remember when, when GGF was being set up, the question was, there's this demand for impact, but where are the managers and where are the companies to meet that demand? And our industry has shown we can absorb, just give us the capital and you'll get enough talent to come up to meet that demand. So the sophistication is, I think, the underlying factor, everything here. And to add to that, Chirantan, what you said, the domestic LP market is growing tremendously. I talk about buzzword, that's the buzzword right now. So, what does that mean for you, Chirantan and Siddharth? Maybe you can jump into the domestic fund industry growing. What does that mean for the foreign LPs?
Thanks. And I hate the buzzword thing because, one thing you don't want climate, for example, is to go into that field of, becoming a buzzword, because actually it is one of the biggest issues our entire planet is facing. And it's just a shame a lot of people haven't realized how important that is, even on the LP side. Just as an aside, we find a lot of our time just goes into educating other fellow LPs about what is climate. And it's frustrating a bit. But on the domestic side, I think what's been really helpful, at least from our perspective, is if you go back in 2008 or even prior, when BII, then CDC Group, was investing a lot in private equity funds, we were the sole kind of institutional LP, us and probably one fund, government fund of fund. And I think that the challenge we used to have is around governance on the LP side. And now you're finding like-minded domestic investors, whether it's fellow fund of funds or HNIs and family offices who have seen that private equity, venture capital asset class closely. We're in sync, right? And so the LPACs are a pleasure now. The GPs are also kind of having that sort of discussion which we need to be having. So it's not just us who are the bad guys in the room, so to speak. So that's pretty healthy, and I think it'll just make the whole LP-GP relationship a lot more stronger. I always stress upon this point that for us as LPs, I think the end goal that we want to reach is to have relationships. We are not, I know we call ourselves asset allocators, but look, we want to have that relationship. We want to learn from GPs, and vice versa. And I think that having the domestic side also stronger will just go towards helping in that. So very, very positive on that.
So I think, look, it's incredible the way the domestic LP base has sort of started participating in this entire ecosystem. And I wish that the entire ecosystem can just continue to just get sustained by domestic capital. I think it saves a lot of time for fund managers. But I think borrowing the sophistication conversation here, I think it's also high time that the domestic pool of capital becomes sophisticated and thinks through about how do they need to construct their portfolio, vintage management, vintage alignment, pipelines, etc. And I don't think that that pool of capital is yet there. And it's a great time for me to plug in Waterfield Fund of Funds. We can really help you sort of curate and do that. But jokes aside, I think it's incredible, but I think it requires a lot more support. What it means for the international guys, and anecdotally speaking, we were talking to this large endowment, and then this conversation was about, oh, I have all the access in the world. Why do I need a fund of funds to probably go and access India? My rebuttal or thought was that, look, it's great. You can sit here and have access to all the regional and the larger players. But in case if you're interested, truly interested in India, I don't think that strategy works. Secondly, because of the phenomenal domestic participation that's happening, how many of the good LPs will actually start reaching out to the international guys? Do they really need to sort of do that anymore? Will they actually make an 18-hour flight trip, sit in a 2-hour conversation where you're selling India for 1 hour 55 minutes and then talking about your fund and your team for 5 minutes? I think it's extremely frustrating. So yeah, I think with respect to the international LPs, I think the on-ground presence, I think if they're really serious, they have to start setting up offices here, getting the right kind of people. Because just being too far away from the geography eventually always leads to committing to the economy, or probably always being under-allocated to it. So you really don't know, you never get the time right. And because of that, I think India as a geography sort of suffers in the overall conversation, because the way I look at it is that India is either on steroids or it's all malnourished, right? It's never like gets the balance and the right amount of capital that it needs. And to be honest, everybody is opportunistic, right? When the capital is flowing, of course, you would want to grab how much ever you can. But I think this is where if there's dependence on the domestic capital, you know that, okay, goes back to the conversation of sophistication. Like you can think about, okay, you know what, I want to have a $150 million fund or a $500 million fund. Not that because I have capital, I'll increase it to 250 or raise $1 billion fund, right? So it helps the fund managers be a lot more secure, do a good job about it, and not just constantly think about fundraising. So, yeah.
Can I just add to that? I hear the frustration in your voice, Sid. But again, if you sort of step back and take a sort of multi-decade view, I remember the first conversations we were having when I used to be in London in Dartmoor. We were having a conversation with SBI to do a fund of funds for India, and this is going back 2006-07. And what was most impressive is that they were willing to learn. They were willing to sit down saying, okay, but we are doing this ourselves from the balance sheet. Why the hell do we need somebody like you to help us now, right? And then we walk them through how do you, structure a portfolio, what are the risk return parameters, the cash flow, and they sort of got it quickly saying, okay, we get the value add here, and we'd love to do something. Of course, that didn't go for different reasons. But from there to today where, you have Waterfield, you have obviously SIDBI's been around, NIF, Nippon. I mean, there's a bunch of fund of funds, there's a bunch of families doing funds and co-invests, so again, just talks about, I think, the progress we've made over the last 20 years or so.
Yeah.
Yeah, no, just to add very briefly, and I completely echo what you're saying, Sid. The domestic capital, and as IFC, we worked with fund of funds, we're working with insurance companies, a lot of the domestic institutional investors as well, because a lot of times, we all understand the importance of investing in this asset class. They want to invest, but they don't know where to start from. And a lot of sort of mistakes can be avoided by good diligence, by strong diligence, by knowing the right sort of players. Who do you want to back? For what reason do you want to back? And we worked closely with a lot of people in the last few years to see where this goes. And I think if you look at it 5 or 7 years ago, domestic capital was almost non-existent. There were barely any investments happening into funds. Now today, venture capital, I think a lot of the venture capital funds have raised almost 30, 40, 50, 60%, even more domestic capital, because they are smaller funds and therefore, they're able to sort of get subscribed using a lot of the domestic capital. For private equity funds as well, I think the only difference that we see in that is for a lot of the larger private equity funds, domestic capital is increasing. But because fund sizes are larger, the domestic capital base is still 20-30% of these funds. But we see that increasing for good fund managers, strong fund managers who've been around, who've shown track record. So I think it's surely increasing and it's there to stay, domestic capital.
To your point, Neha, in fact, recently I heard that the domestic funds, so the domestic LPs are moving slightly away from VC funding to private equity, especially pre-IPO. So I don't know, Chirantan and Pavan, if you want to add to that.
I haven't heard that as such. I mean, they're two very different asset classes. But no, I don't know.
Yeah, I think, again, I wouldn't necessarily agree with that. I think it's just, appetites in general. I think there was a time when a lot of the, wealth managers, distributors were raising capital for pre-IPO strategies. And now, because that market has cooled off a little bit, I think that's sort of waned. But again, in terms of the sophisticated investors, I think there is appetite based on their risk return, their own programs, etc., across the different strategies.
Perfect. I'm just going to ask a very pertinent last question, Neha, Siddharth, if you can weigh in on this. But we've talked about India being a more sophisticated market. We all see it. Is that visible globally? All those initial bangs that then the first round of investors had, whether due to tax uncertainty or regulatory reasons or FX, have we overcome that? Is that noise, in your view, dying down?
I don't know whether we'll ever get over the FX hump, but look, I think we are at from a geography angle, I think we are transforming very quickly. There is greater understanding about how portfolio construction needs to happen. I think there are greater thoughts about, more deeper thoughts about succession, team building. I think more than probably the regulatory hurdles, the FX, I think we as an industry, as a geography actually didn't deliver. We did deliver in certain pockets, but largely we were not able to. And that was also because of macro issues. I think they were also because it's a very young asset class in India. Fund managers are still learning. But I think what I've seen over the last 5-6 years the significant and the quick shift in how the fund managers are now today approaching this business, that's changed. So I think those are the first basic things that sort of needed to come into place and stack up well. And I think those basic aspects are being covered. Concerns, I think there will be concerns, right? I think this ecosystem still needs to be matured. It'll happen for sure. But I think keeping a very, monitoring the DNA of the kind of fund managers that are coming in to the market and what their real intent is. I think that is what we need to continue to monitor. I feel there's another thing, I would probably say even motivation. You know, this is probably the first time there will be a lot of guys making a lot of money, you know, and you've not seen that in India. There, of course, again, small pockets, people have become rich, but I think this time around, there will be people coming into like a lot of money. Now, whether they continue to be motivated to run this ship over and over again and doing the same, this thing about fundraising, investing, exiting, etc. So I mean, I would see probably those are my major concerns. But yeah, thank you.
I'll just take half a minute. India is
I'll
a
modify
bright
it slightly. What do we need to do better?
See, India is a bright spot in the global economy. Today, you don't need to sell India per se, unless there's an investor who's never looked at India before. But even then, they've heard about India, they're curious about India, they want to know about India. 20 years ago, the first port of call at the first meeting was spent on, hey, okay, where are you from? What is India about? Tell me more about India. So I think that has changed for sure. Everybody is curious, they want to know more. If you have a solid track record, if you, as a team, you work together, you can demonstrate that it's more about proving what you're doing, differentiating yourselves in the market. Given that there are so many GPs in the market today, so many teams who've done well over the last 2 decades, and therefore the question is more about differentiating yourselves rather than just selling India along. And I don't want a third gong, so I'll keep quiet now.
So true. After the second gong, I felt like Ghazni is coming and I need to take you to safety.
They need to I think they're going to pick up the sofas along with us and get us out.
So thank you very much. I was going to do closing remarks, but thank you very much. Sounds like, you know, the sophistication really like made me think here that we are really competing with a global economy now rather than just, you know, the Indian GPs competing, which in a way is a great progress, right? So upwards and beyond. Thank you very much.
Thank you so much. Thanks, everyone.
Thank you.
Thank you so much to the panelists. And I'll take a cue from the anecdote and understand that probably from these